Welcome to After the Bell, the Capitalists versus Consumers Daily Market Report. Here is everything that moved the market today, Thursday, May 7, 2026. Today was a historic day. The Dow Jones Industrial Average crossed 50,000 for the first time ever. The Nasdaq set another intraday all-time high. And the Iran deal moved closer than it has ever been. Let's get into all of it. This video is for educational purposes only and not financial advice. Please hit the like button and subscribe so you never miss a daily report. Let's get into it. The numbers at the close. Today's session was a tale of two halves. The market opened strong, with the Dow briefly crossing the historic 50,000 threshold for the first time in its history. But as the day wore on and oil prices bounced back from their lows, the broad market gave back some of its gains. The S&P 500 closed down approximately 0.35% at 7,339. The Dow fell 0.57%, closing at 49,627, pulling back from that brief historic 50,000 moment. The Nasdaq closed essentially flat, down just 0.08% at 25,818. The Russell 2000 Small Cap Index had a rougher day, dropping 1.49%. Despite the modest pullback from yesterday's record closing highs, the broader picture remains extraordinarily strong. The Nasdaq is still near all-time highs. The S&P 500 closed the day above 7,300, and the brief touch of Dow 50,000, even if it did not hold, is a milestone that will be remembered. Dow 50,000. What it means. Let's take a moment to put this in perspective because it deserves it. The Dow Jones Industrial Average is the oldest and most widely recognized stock market index in the world. It first closed above 10,000 in 1999. It crossed 20,000 in January 2017. It hit 30,000 in November 2020. And today it briefly touched 50,000, a level that would have seemed almost unimaginable just a few years ago. For everyday investors, this number matters less as a specific threshold and more as a symbol of the long-term power of staying invested. Anyone who put money into a diversified index fund a decade ago and left it alone has more than doubled their investment. Anyone who panicked and sold during any of the market's numerous corrections along the way missed those gains. The Dow touching 50,000 is a reminder of what patient long-term investing actually looks like in practice. The Iran deal. We are hours away. The most important story of the day, and possibly the week, is the Iran deal, and it is moving faster than anyone expected. Iran is actively reviewing a 14-point U.S. proposal to end the conflict and restore tanker flows through the Strait of Hormuz. President Trump said today he has held very good talks with Iran, and that it is very possible we will make a deal. The U.S. expects an Iranian response to Pakistani mediators today, meaning we could have a definitive answer before markets open tomorrow morning. Here is what a deal means for your money. Oil prices have already fallen significantly on the anticipation of a deal. West Texas Intermediate crude was trading around $94 to $95 today, down from highs above $107 just days ago. If a deal is confirmed tonight or tomorrow morning, oil could fall further, potentially back toward $80 to $85 per barrel. Lower oil means lower inflation immediately at the gas pump. Lower inflation means the Federal Reserve has significantly more flexibility to cut interest rates. Lower rates mean cheaper mortgages, cheaper car loans, cheaper business borrowing. And lower rates are historically very positive for stocks, particularly growth stocks and rate-sensitive sectors. A confirmed Iran deal over the weekend could be one of the most significant positive catalysts for everyday Americans since the conflict began. Watch for developments tonight and tomorrow morning very closely. Today's earnings. Strong across the board. Despite the modest market pullback, earnings news today was broadly positive. Fortinet surged 15 to 19%, one of the best single-day performances in the market today. The cybersecurity company delivered extraordinary first-quarter results, with operational technology security billings up over 70% and free cash flow exceeding $1 billion in a single quarter. CEO Ken Xie's strategy of integrating AI into security infrastructure is generating real results. Fortinet is a company worth understanding. As AI infrastructure build-out accelerates, cybersecurity becomes increasingly critical, and Fortinet is one of the primary beneficiaries. McDonald's beat earnings estimates, and the stock initially rallied before giving back gains by the close. Same-store sales showed resilience despite elevated food costs and the pressure of high oil prices on consumer budgets. CEO Chris Kempczinski noted that value offerings continue to drive traffic, confirming that consumers are being more selective but not disappearing from restaurants entirely. Citigroup announced a massive $30 billion share buyback program, one of the largest in bank history. The stock gained approximately 1 to 1.5% on the announcement. A buyback of this magnitude signals that Citi's management believes the stock is significantly undervalued and that the bank's capital position is strong enough to return enormous amounts of cash to shareholders. Atlassian delivered an exceptional quarter. Cloud revenue hit $1.13 billion, up 29% year-over-year, while remaining performance obligations surged 37% to $4 billion. That remaining performance obligation number is critical. It means enterprises are locking in multi-year Atlassian contracts, committing to the platform for years ahead. Free cash flow of $561 million at a 31% margin is remarkable for a company still investing aggressively in AI capabilities. Warby Parker soared 27% on blockbuster first-quarter results, one of the biggest single-day moves in the consumer space today. The eyewear company delivered revenue and earnings well above expectations and raised its full-year guidance. It is a reminder that strong consumer businesses can thrive even in challenging macro environments. ARM Holdings fell 10% despite beating earnings estimates. Investors focused on supply constraints and concerns about smartphone demand weakness. ARM's chip designs are in virtually every mobile device in the world, and any weakness in smartphone demand flows directly to their results. This is worth monitoring. Smartphones are a leading indicator of consumer technology spending. Whirlpool dropped more than 12% after disappointing earnings and cutting its dividend. The appliance maker cited elevated material costs and weakening consumer demand for big-ticket purchases. This is the flip side of the consumer resilience story. People are still ordering food delivery and visiting theme parks, but they are pulling back on large appliance purchases. The consumer is being selective about where they spend. Chip stocks pull back after massive gains. After AMD's extraordinary 20% surge yesterday, the chip sector took a breather today. AMD pulled back approximately 4%. Micron fell around 4%. Lam Research declined similarly. This is completely normal and healthy after the kind of parabolic moves the chip sector has seen this week. The fundamental story has not changed. AMD's earnings confirmed that AI chip demand is accelerating, not slowing. Micron's high-bandwidth memory is sold out through 2026. The AI infrastructure build-out is real and ongoing. A one-day pullback after a 20% surge is profit-taking, not a reversal of the trend. The next major chip catalyst on the calendar? NVIDIA reports earnings on May 20th after the close. That will be the most watched semiconductor earnings report of the year given NVIDIA's central role in the AI infrastructure build-out. Paul Tudor Jones on CNBC. Legendary hedge fund manager Paul Tudor Jones appeared on CNBC today, and his commentary is worth noting. Jones expressed concern that the market may be getting ahead of itself on the Iran deal, noting that even if a framework agreement is reached, the full resolution of the conflict and reopening of the Strait of Hormuz will take time. He also flagged ongoing concerns about U.S. fiscal policy and the long-term trajectory of the federal debt. But he also acknowledged the strength of the current earnings cycle and the AI infrastructure investment thesis. Jones called the current period one of the most complex macro environments he has seen in his career, with genuinely positive micro-earnings trends coexisting with serious macro risks. When someone with Paul Tudor Jones's track record calls an environment complex, it is worth paying attention. ADP employment data. Jobs report preview. This morning, ADP reported that private payrolls increased 109,000 in April, the biggest gain since January 2025 and a 15-month high. This is the private sector employment preview that sets expectations for tomorrow's official government jobs report. Strong private payroll growth is a double-edged signal right now. On one hand, it confirms the economy is creating jobs and consumer spending should remain supported. On the other hand, a strong jobs market reduces the urgency for the Federal Reserve to cut rates. which means rates may stay higher for longer. Tomorrow's official April non-farm payrolls report will be the most important economic data point of the week. The consensus estimate is for approximately 130,000 to 150,000 jobs added. A number above that range is likely to keep rate cut expectations pushed further into the future. A number below that range could accelerate expectations for rate cuts. Either way, tomorrow's jobs number combined with any Iran deal development overnight means Friday is shaping up to be an extremely significant market day. What to watch tomorrow and this weekend. Tomorrow morning, the April non-farm payrolls report at 8:30 a.m. Eastern. This is the single most important economic data release of the month. Tonight and tomorrow morning, Iran deal developments. The U.S. expects a response from Iran on the 14-point proposal. Any confirmation of an agreement could send oil crashing and stocks surging at Friday's open. Tomorrow after the close, our full weekly breakdown here at Capitalists versus Consumers. With everything that happened this week, record highs, Dow 50,000, AMD's historic surge, Disney's strong debut under a new CEO, the Iran deal on the verge, and tomorrow's jobs report, it is going to be one of the most comprehensive weekly reports we have ever done. Do not miss it. The bottom line for everyday investors. Today was a day that will be remembered. The Dow briefly touched 50,000, and the Iran deal appears to be hours away from confirmation. For long-term investors, the message is the same as it has been throughout this extraordinary week. Stay diversified. Stay consistent. Do not make reactive decisions based on daily volatility. For people watching interest rates, a confirmed Iran deal followed by falling oil prices could be the catalyst that finally gives the Federal Reserve the cover it needs to begin cutting rates later this year. That would benefit mortgage borrowers, car buyers, and anyone carrying high-interest debt. Watch for that development closely. This weekend could bring one of the most significant financial news events of the year. Check back Friday after the close for our full weekly breakdown. That is your After the Bell report for Thursday, May 7, 2026, here at Capitalists versus Consumers. Please hit the like button. It helps more people find this content. Subscribe and turn on notifications so you never miss a daily report. Tomorrow after the close, our full weekly breakdown of one of the most historic weeks in recent market history. We will see you at the closing bell tomorrow. Recommended reading for investors: The Psychology of Money by Morgan Housel. The Little Book of Common Sense Investing by John Bogle. A Random Walk Down Wall Street by Burton Malkiel. This video contains affiliate links. I may earn a small commission at no extra cost to you.